Alright guys, welcome back to the channel. So in this video I want to clear up some things on imbalance, right? What imbalance is, how it's formed, where it's formed, and a lot of misconceptions that are currently surrounding imbalance in Forex. Imbalance in the Forex market is an imbalance or an inefficiency between those buyers and sellers. But why does this happen? So let's take a move like this, for example, right? So we've got equal lows that have been generated at this point, and what have we got below these equal lows? We've got liquidity that's been generated below these equal lows. We see a push down into this liquidity, and on a lower time frame we're most likely seeing some sort of accumulation, Wyckoff accumulation in this area. And from this we see price push up very sharply, right? So in fact it's probably easier if I just draw it out. Alright, so going back to how and why markets move, right? We understand that quite often we see a move like this occur, right? Where we've got an area of consolidation and we've got equal highs being generated, right? And obviously we understand that there is liquidity above this level in the form of people's stop losses and, you know, maybe some orders from people looking to take this long, right? So with the assumption that the banks want to buy into this area, right, to sweep this liquidity and then drop the price, okay? So they buy into the area so that they can fill their sell orders. So if we just turn this to green, signifying buyers, and this to red, signifying sells, okay? Just appreciate that this is exaggerated, right? Okay, so what is actually happening here, right? So the banks start to buy into the market to drive price up, sweeping the liquidity so that they can sell off. Now, quite often, again, not all the time, right? And this is where a lot of the misconception comes in. But when we get this sharp sell-off, right, and we see moves like this, there's often times where in these sharp moves down that the price isn't offered fairly to all the participants in the market, right? So obviously we understand that the markets move due to supply and demand in the markets, right? So at each price point, if there's a lot of selling going on and all the buyers are taken out of the market, right, there's going to be sellers that are still looking to get into the market that haven't had their orders filled, right? So there's going to be sell side inefficiency in and around these levels. And this is often also referred to as inefficient price action. So if we take this area here and I draw it over here, right? What we're going to see is a series of red candles pushing down very fast as the supply is getting taken out of the markets. Now, these candles are also going to have wicks on them. So we'll draw them in quickly, right? And let's say for argument's sake that this is the 1 minute chart. So in between the 1 minute chart, you'd notice the price most likely would have moved like this, right? So it's gone down, we've come back up, right? We've got to this point, we've moved down and we've come back up, moved down, okay, come back up, move down, travel back up, move down, travel back up, right? Ebbing and flowing as the markets move, right? We've all seen this type of movement as the market ebbs and flows. Now, what is it actually doing here? So the market is moving down and then coming back up to fill inefficiencies. Moving back down, okay, and then coming back up to fill inefficiencies. However, in times like this where we see very rapid moves from a level, right? And again, this doesn't happen all the time, and this is where a big misconception with imbalance comes in. We're often getting an area like this, right, where price has dropped off rapidly from a level and it not come back to fill in all the imbalance. So if that doesn't make sense to you, a good way to think about it, right, in a very simple way, is to count 3 candles, okay? So if you've got 1 candle there, 2 candles there, right, and this is your 3rd candle. So what we're going to be looking at is the wicks of these candles, right? So if we draw a line from the bottom of this wick on our 1st candle, okay, to the top of this wick, right, we're going to see that we get this gap in between the candles. Where price has moved away from this area rapidly and hasn't travelled back up to it, this is going to be our area of imbalance. Now, what is this area of imbalance? It's just an inefficiency in the price action where price has moved so fast from this level and hasn't offered the market fairly to both sides of the market, okay? So there's people that have essentially been left behind. Now, often what you'll see is if price trades in and around these levels for a long time, fill in all the orders, right? All the imbalance has usually been filled. So just to clarify, right, this area in between our two wicks, okay, is going to be our area of imbalance, right? So if we take this is our first candle, this is our second candle, and this is our third candle, right? And we draw on from this wick to this wick, okay, where does price come to, right? We come down to the start of this imbalance and then we respect it, right? We start to push up. Very similar situation to here. If we take this green candle, and this green candle and draw on our box in between the wicks, right? That is going to be our area of imbalance. Okay, and what does price do? It comes down and it fills that area of imbalance. But in its place, if we now count between this candle, and this candle, obviously we got this wick and this wick, join them two wicks through, and this is going to be our area of imbalance. So the assumption is that price is going to want to travel back up through this level to fill in the imbalance, okay, before potentially, you know, creating some sort of trend line or some sort of liquidity and then running through that to maybe take prices higher, okay, or something along them lines, right? So again, if we just take a look, let's just go to a random pair and we go to Euro New Zealand, right? So we can see evidence of this on many markets, many different time frames, right? And if we just go to a random pair like the Euro New Zealand, okay, and we pull this back to here and we just start running through the market, right? There is a lot of misconceptions with imbalance, and not every single candlestick, right, is going to, or every single gap in a candlestick is going to represent strong imbalances in the market, okay? Because what you often see is, price will actually, during the session, move through all of the imbalance, right? Move through all of the areas of imbalance, actually filling it as it goes. So let's just play this through, okay, and draw it out as we go. But you'll see that very often the market does tend to fill in all the areas of imbalance. And using this concept, we can actually start to develop quite a profound directional bias when aligned with other concepts, right? In terms of our Wyckoff and our support and resistance, you know, different rejection patterns, different price patterns at certain levels, our institutional order blocks and mitigation levels, right? So if I just zoom in here a little bit closer just so we can see it a bit clearer. Okay, so this is most likely going to be a very good example of imbalance in the market. So where the demand outweighed the supply and we had a very sharp drop off, right? Again, sweeping lows. Okay, so we can assume that naturally price is going to want to travel into this area to refill the imbalance and offer price fairly to the market participants, right, for efficiency. Alright, so we push up a little bit into this level, but we've still left this big hole in the market, which again we can assume price is going to want to come up and fill this area of imbalance at some point in the future, right? And as we're coming down, we can see that this gets filled, right? From there to there, this candle gets filled. Moving up, okay, creating some imbalance here. So there is actually a small amount of imbalance here that we're most likely going to fill as we move up, all right? So there's imbalance that gets created as you go, and as you can see that the price pretty much fills most of that imbalance and then moves up. And we've actually got another area of imbalance there now, which then gets filled, okay, creating this area of imbalance, right? So this is actually a big area of imbalance now. And we actually fill in some of that imbalance, right, before filling the rest of it. And then bang, we get a sharp drop off, and then straight away we come back up to fill the imbalance, right? Where do we come to? Back up into this imbalance, right? Again, leaving some imbalance in the market there, which we can assume is going to come back up to get filled, right? Leaving imbalance, we fill, okay? Leaving some more imbalance, right? Which we then come up to fill. Okay, sweeping the highs. Okay, so we've got equal lows that were taken, right? So this we can assume is our order block. If we would come back down to this level, we could most likely look for some sort of mitigation out of this level. We do travel up in past it, come back down, so potentially some mitigation took place at that level, right? Where are we expecting price to come to? Again, we've still got this area of imbalance here. We're assuming price is going to want to come up to fill in this imbalance for efficiency, right? Okay, filling in all the imbalance as we go, right? That got filled, leaving a small hole there, right? Which we're most likely going to come up to fill. Come up, fill that imbalance, leaving some inefficiency or imbalance there, right? Filling in most of this imbalance, which we then drop down to fill, and again we fill the imbalance that was most likely here as well, fill most of this imbalance. Alright, so we've come back down to test this order block, and as we've come down, what have we done, right? We've pushed up and we've pushed down very sharply, okay? Creating some more imbalance here, so that's all been filled, right? Creating some more imbalance here, and actually some imbalance in between there, but most of that has actually been filled now. So we've actually started to generate some equal lows on this level, so maybe we see some sort of manipulation of this level before we get a push to the upside, right? Let's just run price forward, see what actually happens. So we push up and fill this imbalance, right? And that looks like I've seen this. I haven't. I literally just picked a random place on the chart. But as we've pushed up high, what did we do, right? So we pushed up and we came back down to fill the imbalance, right? We pushed up, came back down to fill the imbalance. We actually got an area of imbalance there and an area of imbalance a little bit higher, right? As well. So as price comes back down, fills in the imbalance and starts to move higher, right? Again, filling in the imbalance, okay? We had a very strong push up, right? Most likely leaving some inefficiency in the market. And based on our very entry level description of imbalance, where we're going from the 3 candles, so counting this is our first candle, this is our second candle, and this is our third candle, we have this area here of imbalance, which price then comes down to and fills, okay? Before traveling higher, right? And again, we see that strong push down and then bang, price comes back up to fill the imbalance in that area, right? So again, this happens everywhere and on multiple different time frames. So look, we see a strong push down, okay? Leaving an area of inefficiency in the form of imbalance in this market. So we can assume that price wants to come up to fill this area of inefficiency in the market, right? So again, we come up, fill 50% of this imbalance before continuing lower, right? Again, the market pushes down very sharply, comes back up, where? To fill the imbalance, okay? Before coming up, testing this level again, dropping off, coming back up, filling the imbalance, right? Very, very cyclical, okay? So we push up, fill the imbalance, right? Push up very sharply, leaving a massive area of imbalance in the market. What can we assume price wants to do? Fill the area of imbalance for efficiency. Now just be aware, right? Price doesn't always have to fill areas of imbalance straight away. Now don't be surprised if the market leaves a gap, right? So like this gap here, okay? So if we take a look at this area here where the market dropped off very quickly, okay, and it hasn't returned. Now the market doesn't have to come back up here and fill this imbalance, right? It's only for efficiency. And again, trying to get as many people involved in the market as efficiently as possible so that the big banks and the institutions have enough liquidity to execute their orders and to play around with their orders, right? Because again, they're trading with large position sizes, but they don't have to fill every area of imbalance, right? There's some areas of imbalance that, you know, happen straight after order blocks, right, that are going to have more significance than others that we're going to want to pay attention to, okay? Travel up, creating an area of imbalance, we travel back down, right? We travel back up into the area of imbalance and then we travel down, right? Creating another area of potential imbalance, right? Again, it's potential imbalance. Again, travel back up through, creating, filling all the imbalance, okay? Fast drop off, right? What can we assume is here? Imbalance. Comes back up, fills the imbalance perfectly before dropping off, right? Creating what? More imbalance. As the market comes back down, fills the imbalance, most likely hitting an order block before travelling higher. Doing what? Creating more imbalance, right? Travelling up, filling imbalance as we go, okay? Creating more imbalance, right? Again, repeats time after time in the market, okay? So we actually see a strong sell-off here and a push up, right? Filling this area of imbalance, probably trading off of an order block on a lower time frame. So this is the sort of area that on a lower time frame we want to look for that accumulation, right? You know, the schematics that we've covered, okay? Looking for higher prices to potentially come and take liquidity from these areas, filling in these areas of imbalance, right, on the way up, okay? And again, I don't actually know what happens here. It could just completely drop, right? Filling in the imbalance, probably tapping into some more order blocks, generating some more equal lows. So generating some more equal lows below this level that we're most likely going to trade through and then continue higher, right? So that's the trade through, and we don't continue higher, we actually just drop off the edge of a cliff. And there's also going to be areas of imbalance that are left for years, maybe because we've traded off of a higher time frame order block, or we've swept a level of support or resistance, okay, and we've traveled away from there, right? Maybe there was something else that happened in the world that, you know, pulled price away from that price point and it never returned. So again, if we just look what happened here, we travel up into this area, okay, and we drop off, right? As we drop off, what do? Most likely create some inefficiency that we can expect price is likely to come back to and fill, okay? That actually got filled. This area of inefficiency actually got filled as well. Okay, filling in the rest of this inefficiency, which didn't actually get fully filled, okay? We may see a push down before a move higher to fill in this imbalance, right? We push down. So this area is yet to be filled, right? So you can see that it doesn't have to be filled every single time, right? Again, another area of potential imbalance there, right? Drop off very fast, another area of potential imbalance there. So there is actually a lot of an inefficiency to the upside, okay? Again, if we were just to move out to a higher time frame to see what's actually going on here. Let's see if we can find out where we're targeting, right? So we'll jump out to the daily. Right, okay. So if we look on a higher time frame, on a daily time frame, right, we can see that we've actually got structure looking left, okay? We've most likely got a lot of liquidity around this level. We haven't actually taken this level yet, but we're just coming down to test it. We may not actually even sweep it. We've started to push up, right? But we know that there is a lot of inefficiency in this market, right? So if we just drop down again to the hourly, we can see all this inefficiency here above this level, right? What are we also creating? We're also creating trend lines, right? So we've got liquidity forming above here. We've got a lot of inefficiency above here, okay? And we've got liquidity below this level. So this is going to be another great place to look for our Wyckoff accumulation, right? We've been traveling down for a while. We've got a trend line build with obvious liquidity above it, a lot of inefficiency around the area above. We've got liquidity below, so if we see some sort of manipulation on this structure level, right, and then a test of our order block, right, we can expect higher prices, okay? And we don't actually get that. Maybe on a lower time frame, we may have actually had that manipulation, right? We most likely did. So if we was to actually drop down there, we'd most likely see accumulation at that level, looking to take price higher through areas of inefficiency towards liquidity, right? Again, filling in the imbalance, filling the imbalance, filling the imbalance. All that imbalance gets filled, nearly filling that imbalance, right? Leaving in its path other areas of imbalance that comes back through to get filled, which we then trade off of. Leaving other areas of imbalance, right? Which we then trade down to. Where do we respect? Right? The imbalance, we move higher, okay? You can see, right? An area of imbalance, we come back through, okay? We fill the imbalance, we move off. What do? We create more imbalance, okay? What do? We come back up, we fill the imbalance, and we have a sharp drop off. We trade through that. Again, what have we done here? Equal highs, traded up through them, drop down. So if we was to say this is our order block, right? We've also got an area of imbalance there. Okay, come back up, fill that imbalance. Probably would have sold from that level if you was looking at that on a lower time frame, looking to take prices lower, right? Where are we going to travel to? I probably wouldn't be inclined to travel too much lower than this area. Okay, so we might get something like this before we come down and then potentially take prices higher. I don't know, this is just, and we never actually get that, we just take prices higher anyway. Right, and that is where we're up to now. So again, you can go onto any time frame, any pair, right, and see these areas of imbalance as they get filled, right? So again, we've got an area of imbalance there, comes back up, gets filled, okay? Leaves an area of imbalance, we get filled, right? We come back down, strong push down through here, right? Taking these lows, most likely leaving some imbalance, right? That we can assume price wants to come back up to fill this imbalance, okay? Before doing whatever it wants to do next, right? So, all right, so I hope that concept of imbalance makes sense. I hope that you can see and understand as well why the market likes to travel back to these areas of imbalance, and more importantly why they're formed, right? So that we understand why the market wants to travel back to the areas of imbalance for an efficiency, understanding that price likes to move towards areas of liquidity, okay, to take orders, and then as it moves away from areas fast, we create areas of imbalance and inefficiencies, which price then likes to go and fill, right? So again, I hope that makes sense. If it does, drop a like on the video and subscribe to the channel for similar content. And wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.